It is time now for a check of the top business news. Kate Moody, our business editor, is here. Hello, Kate.
Hi, Tom.
The markets, like the rest of us, trying to come to terms with the fact that the Tuesday election was inconclusive. How are they reacting?
Well, they're doing pretty well so far. A lot of analysts saying that markets had already priced in this period of uncertainty, this waiting period, and the investors therefore taking it in their stride, zeroing in on what we do know so far. Now, Wall Street's continuing its post-election surge. It scaled back slightly on Wednesday after the Trump campaign said it would be asking for a recount in Wisconsin, but stocks are trading sharply higher there. The Dow Jones currently up around 500 points. The tech-heavy Nasdaq still outperforming, up not far from 3%. Wall Street is on track for its best week since April if things keep going on Friday. The major European indices closed higher as well. The FTSE 100 only slightly above the flat line. The CAC 40 up about 1.25% here in Paris. The DAX nearly 2% in Frankfurt. Analysts say that the markets are broadly embracing this prospect of a Biden presidency, in part because they expect him to promote a large coronavirus stimulus package and force it through a divided Congress. The likelihood that the Senate will remain Republican means that some of his more radical policy proposals, and in particular the reversal of Donald Trump's tax cuts for corporations and the richest Americans, would be harder to push through.
Erstens kann man sagen, wenn Herr Biden Präsident wird, gibt es weniger Handelskriege oder gar keinen Handelskrieg mehr. Es gibt mehr Ruhe in das geopolitische Korsett. Da hatten wir ja in den letzten 4 Jahren ja einiges, was schiefgelaufen ist. Und das heißt eben auch, dass unsere Exportwerte mehr wieder exportieren dürfen, auch nach Amerika, was auch für Arbeitsplätze wichtig ist. Zweitens ist aber auch wichtig, der Senat bleibt in Amerika wahrscheinlich republikanisch. Das heißt, massive Steuererhöhungen oder die Zerschlagung von Branchen wie Hightech, Pharma oder Banken sind nicht zu befürchten.
Well, job creation will be a top priority for the incoming administration, whether Republican or Democrat. After years of solid growth, America's labor market has been battered by the coronavirus pandemic. The number of new applications for unemployment benefits fell slightly to 751,000 last week. The pace has remained relatively stable since the beginning of September, after peaking during the lockdown in March. Before the pandemic, the average number of weekly claims was just over 200,000. Nearly 22 million Americans are claiming unemployment benefits, either under regular state programs, extended relief, or the emergency pandemic support programs. Economists say many of them could remain out of work for the medium to long term. The October unemployment rate is expected to drop from 7.9 to 7.7% when that data are released on Friday. 4 years ago, when President Trump was elected, unemployment stood at 4.7%. Well, meanwhile, the U.S. Federal Reserve says it will keep interest rates near zero until employment recovers fully, and it's vowed to use all of the tools at its disposal to help the U.S. economy recover from the effects of the pandemic. In its latest statement, the central bank said economic activity and employment had continued to recover, but remained well below their pre-pandemic levels. And Jerome Powell said the increase in cases across the United States remained of particular concern, posing an ongoing risk. He also said that more stimulus would likely be needed. Well, the British government has stepped up its financial support for businesses and workers as England begins a 4-week lockdown to curb the spread of the coronavirus. The Bank of England held interest rates steady but increased its stimulus program, pledging another £150 billion, or around 166 billion euros, to its bond buying program. The Treasury also increased aid for the self-employed and extended its furlough or wage support program, which had expired officially at the end of October. The Chancellor of the Exchequer said the financing would continue through March and be available to affected businesses across the UK.
But as we saw from the first lockdown, the economic effects are much longer lasting for businesses and areas than the duration of any restrictions. The government will continue to help pay people's wages up to 80% of the normal amount. All employers will have to pay for hours not worked is the cost of employer NICs and pension contributions.
Okay, so some welcome news as these businesses in England, Tom, really struggle to work out their future.
Indeed, not an enviable time to be a finance minister either. I wouldn't have thought, juggling all of that. Thank you very much indeed, our business editor, Kate Moody. Thank you so much. And that's it from us. I'll be back in a couple of minutes. Stay tuned.